What's up, guys? Welcome to the Crypto Savvy channel. We're going to go over the markets, take a look at what to expect. And if you guys enjoy these videos, make sure you smash that thumbs up down below. Also, subscribe to the channel if you haven't already, if you want daily updates, and make sure your notification bells are ticked to get notified when I post new videos. Another great thing you can do is leave your comments down below. Let me know what you think of the videos. So as you guys can see, the futures pre-markets are down quite a bit. So could we have more downside? We're going to talk about that. We're also going to take a look at an Elliott wave count that I posted yesterday morning and see how that's playing out. If you guys follow me on Twitter, you'll know what it is. We're going to go over it in a little more detail. If you don't follow me on Twitter, give me a follow. It's at CryptoSavvy1. There's a lot of scammers out there. Make sure you use the right one. I have the links down below in the description to go to my Twitter. All right, taking a look at the DXY, I told you yesterday I thought we were bullish and going to pop over this. There's a few things that could happen right here with the DXY that will determine what's going to happen for Bitcoin. We'll talk about that real quick. So if we break up here, this could be just a inverse head and shoulders that we're seeing right here. That being the left shoulder, this being the head, right shoulder. So what area do we look for? We look for a pop above that 103 area. And if we do, that would get us on the DXY up to approximately 104.28. So we can move this target down here. And this is what we'd be looking for a rejection area. Maybe Bitcoin gets bounced if we hit up there. But could this be a rising wedge? If that's the case, then we get rejected at that 103, come back down over here. We may come back and retest this 101 one more time. What would that create? A big W. So either way, in the long term, I'm bullish on the dollar. I have been for a very long time. I've talked about the DXY for years being bullish, and you can see what's happening with it. All right, let's take a look at the Dow Jones. So the Dow is, again, right at our resistance, just hanging out here. If we do have a pump in Bitcoin, the Dow will remain above this 32.9 area. We talked about that, and then get another fake rally to here. That will be the rally for Bitcoin if Bitcoin gets a rally. Otherwise, if we continue opening and closing candles below this, we come back down and test this area. And if this area breaks, I've showed you guys in my previous videos what I think is going to happen in the big markets. Go back and check any of those videos out. So looking at the weekly, as you can see, we're getting a weekly red candle again. You guys know my big picture on the weekly. Let me see. I don't know why my stuff disappeared there. Oh, well, I'll check it later. Here's the daily chart. We had our 5 waves down, which I remained bearish there. Said look for a 3-wave structure up. We got that, and then a continuation to the downside. Let's look at where we're at now. The target from this rising wedge has been, ever since before we broke, I had told you if this broke, we were looking for the 24.3. I'm still looking for that area. I have not changed that a bit. Also, if we look at this as one big bear flag from the break of the structure here to the bottom of the flag where it broke, that gets us down to around the 6,800 range. As you guys know, I have targets as low as 3,500, but I think we definitely see under 10K. I could be wrong. If we get a big bounce here and that's it. Now, mind you, we'll get a bounce there most likely. It could last a while. As you guys know, I think the bottom will be in 2023. I still believe that. Let's zoom in here a little bit and take a look at what's going on here. So we're getting a little bounce right off of the top of this triangle. Again, if this breaks, if we break that 29,150 range, our next stop is going to be around the 27.4. Again, like I said, I'm going to show you an Elliott wave count that I'm watching closely right now. But if you look here, we made lower highs on the daily. We made higher highs on the RSI. That is hidden bearish divergence. Remember, hidden divergence is a continuation of the trend. So hidden bearish is a continuation of the bearish trend because we are in a bearish trend. Let's take a look at the 4 hour. So on the 4 hour, we had our first target here hit perfectly. That was a measured move of this rising channel coming down, but I do think that was the bear flag. Let's zoom in and take a look at what's going on now, and you'll see what I'm looking at. So first off, we take this measured move, looking at this as a rising channel, which we broke. We talked about that yesterday. And if that breaks, which it did, gets us down to around that 24,000 range. Again, these targets aren't to the penny, guys. They're just an area to watch. But that's where I believe we head if this does continue down today, if the DXY does get that bullish move of the inverse head and shoulders. So let's get into the Elliott wave count. But before we do, if you guys are interested in trading, definitely check out Prime XBT. Links down below. Not like all the scammy exchanges that trade against their customers. Definitely check them out. You can use my promo code SAVVY50. It'll get you a $7,000 up to a $7,000 bonus. Savvy25 will get you 25% off your fees. You can trade traditional markets, Forex, gold, silver, oil, S&P on all this. We're also going to be taking a look at Ethereum, Litecoin, and XRP at the end. Also, gold and silver. Gold has been key as to which way Bitcoin's going to, and I'll show you that again. I showed you yesterday. I'll show you again. So yesterday morning at 8 o'clock in the morning, I posted this and said if invalid if 31.7 breaks. Obviously, that would be a 4-hour close above. But you can see what I put on there. Let's look at that chart now and see what it is. So this is what I posted. It looks like this is what's going on now. Let me get this stuff out of the way and I'll show you how I get these measurements. You get all this stuff out of the way. So first off, we looked at this high to this low, right here. Let me put that on there. You go from the high to the low, and that's the 0.786. Wave 2 often goes to the 786, and that's exactly where we went. So that's why I had that looking for wave 2 there. Wave 3 comes all the way down to around the 26.6 range, 26.7. Now, there's always what that doesn't mean it's one straight candle down. We'll get waves within that. I'm going to keep this video short so it doesn't bore you to death, but this would be, we would get a wave 1 here, and then a wave 3, and then a wave 4. This is going to take time, possibly a week or so, and then we would get another correction to the upside, and then 5 more waves down within this. Now, in each one of these waves, there's also waves. That's why you get bounces. But anyway, these are my targets right now. So how did I get 3? If you take your Fibonacci extension and you bring it to the top of wave 1, bottom of wave 1, top of wave 2, that gets you to the 1618. Now it could go lower, it could go higher, but this is just often how the Elliott wave structure works. Then we would get a bounce there to possibly back to that 28.6 range. Now, how do you get the bounce? The bounce, you take your Fibonacci retracement from the top here to the bottom. Now, this is all invalid if we break that 31.7, okay? That invalidates this count, just so you know. But as of right now, it seems to be playing out. So if we were to put our Fibonacci extension from, Fibonacci retracement, if we do get all the way down to that end of that wave 3, and again, this is going to bounce around in here, guys, unless the 31.767 is broken, then it's still valid. So let's take a look at what's going on here. So if we take this to the bottom where I think it's going to be around 26.6 range, these would be the areas to look for your bounce. Now, since wave 1 or wave 2 was a deep correction, wave 4 is probably going to be not so deep. So we would look for a bounce or a retracement to the 0.236 first would be around 27.8. Then the next one would be around 28.5. And then we could go, see, we shouldn't go back past this wave 1. So I don't see it getting to 30,000 again. Once we break this, we could right here, because we're going to get a wave 1 and then a 2 and then a 3, 4, 5 down. So, but once we reach that 26.6 range and get a bounce, I don't think we see 30,000 again right after that. Now, what a lot of people don't understand is they think that's just doomsday. Remember, we're looking for a bounce around that 24,000 area. That will make this possibly, this is how I'm looking at it. I'll let you know if I change it. But this would be a big wave 1, and then we would get a wave 2 up. Where would the wave 2 go? Same thing. Once we have our bottom and we confirm the bottom of this structure, then we take the Fibonacci retracement, and we would look for possible retracement. Could go as high as the 786 again, around the 30,600, 30,700. I would look for a major rejection around the 29.3, but I don't want to go into all that too much because that just confuses people, but I'm showing you how I get the wave counts, right? So how did we get the wave 5 down here? If this plays out, we go from the top of wave 2 down to 3, up to where our 4 may be, like I said, depending on where it goes. And then we look for our fib levels, 25.2, 24.4. I still believe, like I said, 24 range, and then a bounce there. Get everyone bullish again, as always. As you guys know, this is my Amazon compared to Bitcoin chart, playing out beautifully so far. If this does play out, it shows the bottom being sometime in the 2023, maybe the middle or end of 2023. Everything seems to be playing out. Remember, I told you guys how a bear market works. Everyone gets bullish every time we get a little bump like we did here. So everyone starts to enter thinking we're going to the moon, and then it drops more. And then everybody wished they would have sold up here, and then it starts bouncing again, and then everybody gets bullish again. And then it dumps again. That's how they keep liquidity. If they sold all their stuff up here, it would just crash. They need these bounces to keep selling off into so they don't crash the market all at once and then they can't get as much for their Bitcoin. So now, one other thing. So everybody talking about dollar cost average. That's fine if that's your thing, but I want to explain why it's not always the best idea, especially if this is going to play out like the Amazon chart. So if you would a dollar cost average all the way down here, instead of just waiting, now people think it's going to just bounce and go to the moon. Well, you'll see here, this was in 2001 when it bottomed, right? If you were dollar cost averaging that whole time, that would have taken, it did not break the all-time high for 10 years. So just something to keep in mind. I'm not saying that's going to happen, but be careful, guys. If you do think it's going to continue up, by all means, buy. I'm not telling anyone to buy, to sell, to long, or to short. I show you what my ideas are on the market, and it's up to you to make your own decision. So make sure, before we go into the alts here, make sure you smash that thumbs up, leave a comment down below, share the video if you would, and make sure you're subscribed if you haven't already. All right, so Ethereum. This chart is 6 months old. We had a target once we broke this wedge of 1919. And then we were looking at this rising channel that gets us to the 1564, where I think we're headed now. Then if we look at this whole thing as a big bear flag, that could get us as low as the $600 to $700 range. I talked about that yesterday. Now, it could go much lower. Let's look at the weekly chart. So we look at the weekly chart. I showed this yesterday. Seems to be printing a bear flag. We could bounce around in here for a couple weeks still, maybe. But that gets us down to around that 650 range also. And then after that, the only support after that's around 200, which was the last bear market bottom, which we could see again. Litecoin, same thing. 6-month-old chart. We had a target of 24. And if we go into the weekly, we could see much lower actually, because that also seems to be forming a weekly bear flag, and that gets us down to around $8. XRP, as you guys know, my first target's 28, then 17, but again, this could be much, much lower also. I know everybody thinks that it's going to go to the moon. I don't believe so, guys. Back here in the Amazon bubble, this washed out all the .com scams. I think we're going to wash out all the crypto scams in this dump. I've talked about this since December 2nd. You can check my YouTube page. I made a video on it when I found the Amazon to Bitcoin comparison chart before anybody else was talking about it. But Ethereum, or I'm sorry, XRP, let's look at the weekly. Weekly for XRP gets us all the way down to the 3-cent range, which is very possible. I'm not saying it's going to happen, but damn, it's possible. Now let's look at gold. We talked about this yesterday. Anytime gold is below this channel, you guys know my big picture on gold looking for around 1561, possibly much lower. But every time, I told you yesterday, if we're trading below this channel, Bitcoin's going down. We're trading below this channel, Bitcoin's going down. Silver, as you guys know, my targets still remain the same. We come test this 20, maybe get a bounce once we break the 20, looking for 1550. Thanks for watching, guys. One more time, do not forget to smash that thumbs up. Leave your comments down below. Check out my links down below. You won't find a bunch of Bybit links and all that stuff because I think they're garbage. Everything down under mine is stuff I trust and use. So thanks again for watching. Don't forget to leave your comments, share the video, and I'm out.